Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, January the 31st. The year's 2021. Let's talk trading. It's time for the weekly opening gap. These videos are for educational purposes only, and your results may differ from mine. And since this is the last day of the month, just a reminder, keep your risk in check. Never lose more than you're willing to lose on any given trade. Okay, for the week, as you can see, we've had some gaps and we've had some fills. We still have 4 pairs that haven't filled the gap. So you might want to consider taking one of those gap fill trades. Remember, you want to trade away from the weekly open and towards last week's close. As you can see here, the opening day for January is the same as the opening day for the year, and we actually started out inside that range, and we're already 20 some pips above it. Move to the upside, look to see if we still range or if we break out of this range. For the year, we're up 83 pips so far for the month 23, which is same for the week and the day. Inside 5 days ago, we're now broke 3 pips above that. So inside bar traders, you really don't have much to choose from this week so far. So you'll have to wait, and every day there's a possibility that you get an inside bar. And looks like the pound dollar's making a new high here. We're just starting off the top of the hour. And since we're only 4 hours into the day, as you can see, we don't have any pairs over 100 in range. The pivot point was right next to the weekly open, so there was really no bias there. But taking a buy in the buy zone, you'd already be up a few pips here, about 15 pips above the daily open, plus 10 pips there. On the rat zone, as you can see, range is too low for the rat zone. No rat zone trades. And it was interesting. I was looking at some market structure documentation. A lot of the people that take that trading nut challenge, they talk about market structure. So I thought I would study it a little, see what they're doing, and it's kind of interesting. They're basically trading out of the rat zone. What they're looking for is they're looking for a break of the highest low and a break of the lowest high. Whereas with I do the holos, highest open, lowest opens. So it's very similar, very, very similar. It's just sometimes some people get caught up in conceptual terminology as opposed to just talking about highs and lows. But most of the market structure talks about higher highs, higher lows, lower lows. So that's one of the reasons I was studying it. And I've written a couple of indicators that I'll probably show you later in the week. Okay, pivot point, we already took it out. Weekly pivot 136.88. Let's see if we hit that sometime this week, maybe even today. On the daily here, we've already taken out that daily pivot, but the weekly not so much. We had a low of 93, so we missed the pivot by 5 pips. Let's just see what happens. Wick zone, you can see we're in and out of the lower, now into the upper. On the ranges, not much range yet for the day. And looking at one of my trading screens. And you can see where the ATR zones are. So as you can see, we haven't hit the ATR zones yet for H1. These are H1 ATR zones. So if it comes up in here, you look to short. If it comes down here, you can look to long. And it looks like price has made that new high. And this high here, this is this right here was the last hour's high. So it tried to make a new high, failed, put the one ball in, and we're starting to come back down. And I think somebody wanted to take a look at these indicators. So these are the indicators here. And the only one that you might not have is the TRO 2021 donational, the tug of war candles. And one thing I've noticed that's really helped me, I guess, see price even better is by having these candles, because you can watch as the buyers and sellers, are engaged in that tug of war. So as you can see here, sellers just pretty much pushed it all the way down. And what this tells me is don't even think about going long unless possibly the buyers can push it up through that high. Oh, and so here we have 3 instances of the TRO HL5. So this one's indicator tag 2. This is the daily closes that puts in those light blue closes. In this instance, indicator tag is 1. And you can see 1 hour, solid lines. And what we're looking for here or actually just is the open line, because we are showing the open distance as see this one, yeah, show ATR from open, show distance as ATR percent true, and that's what that's showing there. And then finally just the H1 closes, and I'm using the last 120 bars, which is 5 times 24, in case you're wondering where that number came from. 1 hour bars. And basically all I want to see are the closes. And that's what gives me all those, I think they're saddlewood color lines. Now notice here with these tug of war candles, it put in a 1 ball here, and you see you've got green. So, and this is what I call the weight candle. It did break the high, but you can see it came back down. So this is the candle you want to see. If it breaks this high again, then possibly go long. But there's one thing about this particular trade here. This 1 ball is kind of in the white space. I like to see the 1 ball like pretty much right on top of the line. Now, what's also is interesting, if you take this one, if you turn it off, and what you can now do is you just look the trade from blue line to blue line. So right here, that trade was probably good for about 10 pips or so, even though it started to reverse. Then off of this 3 ball, you see it came down here. And so you just look for that price action, or consolidation, whatever you want to call it, to occur around these blue lines, which are previous days close, 2 days ago, 7 days ago, 4 days ago. And right here, once again, you're either going to see it hit that line reverse, hit that line rocket through, or like in this case, you see some consolidation happening. And as I mentioned before, this was the candle right here that you would have traded long on, trying to break that. So it didn't quite break it, but this one did, and you can see price moved up. And we talk about looking left, so you can see here when price was here, you look left, it's above that high, and this is a higher, above this low, and this is a higher low than this one. And looking left, it was green, green, green. So you take that trade, and then it's just pushed up through it, pushed up through all that red. So you kind of want to buy when it's green, and then you see here, we're moving up. That reminds me, there's a change I want to make to HL5. I made it to a couple of the new indicators that I wrote. I need to put that in HL5 also. So I hope that gives you an idea. You can see now a nice move off of that one ball. And this is just something that I've been noticing just by, all the time in front of the charts. And yeah, on the market structure, it was funny because I was talking to a trader about it, and I told him that, for me to understand something, I have to be able to code it, because if I can't code it, then I don't understand it. So that's what I was doing today. And it is kind of interesting, some of their concepts, but it's just, once again, it's really horizontal lines. And from my terminology, you're basically trading out of daily and weekly rat zones, monthly rat zones too sometimes. But of course, we can always just keep it really, really, really simple and just look at the Walmart lines and trade accordingly. So you can see here at the 3,700, actually before, a short there would have paid off about 5 pips, then a long, you would have cashed in for 10 or more pips if you rode that trade out, and if you're still in it, you'd be up 20 or more pips. And if you notice here, we're 24 pips above the open right now, the daily open, and 32 pips off the now 33 pips off the low. So what that means is if you would have went short, could have picked up some pips and then turned right around, and gone long and made more pips, and trading with the daily candle color. And as you can see here on the candle color multimeter, right now everything is green. We just opened a new 15 minutes, and you can see here what's going on in terms of candle color. So the thing about trading is, can it be that simple? Yes, it can. Do you need a bunch of indicators? No, you don't. Indicators are tools. Some things help you see, some just, are gauges that give you some values, once again, to help you make decisions, because a computer can compute faster and more accurately than you can. But in order to make a profit, you don't need them. What you need is your money management, your risk management, and your brain management to all be working. So this, I guess, actually, I probably could have said monthly wrap up, even though technically it is Monday. So this is the beginning of a new month. So fellow traders, I hope you've had a fun, safe weekend. I hope you have a profitable day. First trading day of February, and a profitable week, and a profitable February, the month of February. And just remember, when you're sitting down at your trading platform, it's not what you trade, it's how you trade it. So go out there and Trading the banks, Rumpled One.